really good news yesterday, just to some of the economic data that we got back.
Hey there, everyone. Jamie with Self 1%, joined by the gang as usual at broker Dave Barlow and older brother Jason. And we have
Hi, Jamie.
We have a market in 2 minutes, a little breakdown by Ryan at NFM Lending.
Hey, Ryan.
Good morning, Jamie. Good morning, Jay. Good morning, Dave. How are you guys doing?
Doing good. How you doing?
I'm doing good. Better than I deserve, I always say. Yeah, marketing up in 2 minutes. Ready, set, and go. We had really good news yesterday, just to some of the economic data that we got back. We saw general improvement in rates yesterday. Overall, the past month, this past week, rates have been going up back to where we were seeing them towards the end of the last year. There's going to be some variances. They're going to be going up and down. Right now, the big kind of market focus is going to be for next week, and that's going to be because the job reports come out next week and also along with the CPI. So those are going to be a bigger and significant influence on future rates will be. But right now we're seeing them anywhere from the high sixes to the high sevens and anywhere between, just depending on your specific situation and the strength of your overall profile.
So any question, Ryan? Now, when you say good news, it was actually bad news.
Well,
good news for the mortgage.
Yes, because bad
the
news
opposite.
General. But what that bad news forced it to happen was people bought into the mortgage-backed security bonds, which ultimately is good news for mortgage rates.
Right.
So,
and so with the job
mortgage rates, good news.
With the job report next week, any predictions on how many jobs will be produced?
Yeah.
I say there will be at least 750,000 new jobs, and then the following month they'll revise that back to about 125.
Yeah, so that's normally what happens. They always overestimate it, and it always underdelivers.
Yeah.
That's as far as numbers, exact numbers, I don't know, but I typically tend to say that that's how that's going to work.
Where does it need to be good news for the mortgage-backed securities, but bad news for the economy?
I mean, I would say
like around 100.
As long as, I would say what we want is their estimate to be fairly close to what we were predicting or what they are predicting, what those actual numbers are. So you don't want them to be drastically under. You don't want them to be drastically over. That's when we see these big fluctuations.
Right.
We can always anticipate what's going to happen. That's the best outcome for everything, because if they're anticipating it, we've already made our adjustments, months ahead of time. So it's when we get crazy news, that's when things tend to swing drastically.
Reminds me of an old saying by our grandfather.
What's that?
Pink sky at night, sailor's delight.
Yep.
Sky in the morning, sailor's take
Good for morning. Yeah.
Yeah, it's Ryan, for like buyers out there. I mean, like, what's your rate right now on like a 5 or a 7-year ARM? What does that look like?
Honestly, they're about the same for a 30-year or 15-year conventional loan. Honestly, like if you were to pull up, just type in mortgage interest rates on Google, and a data like bar graph will come up.
Right.
And these are average rates that were closed in Ohio, 20% down, 300,000 loan amount, 7 to 719 credit score, which is kind of just run of the mill credit score. But that average on a 30-year fixed that closed as of yesterday was a 7.7, and the 10-year ARM was a 7.8 averages. So, I mean, if you're going to ask me what that would look like, I would go with that 30-year fix all day, because there's no real reason why you would go with a 10-year ARM making it no advantage. Exactly.
Right.
So they're typically the same. That's a great question, though. We actually had a client of mine looking into ARMs as well, and we ended up with a 30-year fix just because it didn't make sense, because the ARMs weren't that much greater.
All right. I hate to be the bearer of bad news this way. Jamie?
Time's up. A little over 2 minutes.
A little bit. Take us home, Jamie.
All right. Well, thank you, Ryan. As usual, every week you come on here and do a great job for us and our followers. So thank you for the news update. Your raspy thrown all. Give him a call. You can hear that raspy voice all to your own. Have it all to your own. So Ryan at NFM Lending and here at Sell for 1%. We'd love to help make your dream a reality and find the house or sell your home and move you along down the line. So comment, share, let us know what you think of the market down below. Thanks, guys.
Thanks, fellas.